To one of today's big stories, and this is of course around gold, understanding that the commodity has been enduring the worst rout since 1966. Now, Bob 1996. That's my nines and my sixes jumping around. And now Bob Iaccino, he's the chief marketing strategist at Tethys Partners. He's on the Skype line and joins us now for more. Bob, thank you so much for making the time to join us. My question to you is this going to get worse? We're looking at 1,094 this evening. Is it likely to go much lower? And if it does, what is the state of casualties that we should be expecting?
Well, thank you for having me, and I'm afraid it is going to get quite a bit worse. I think whenever you have moves like this, first of all, you start with the move up that we saw in the precious metals from 2007 that was really unprecedented from a percentage basis as well as a price basis. And when you see those kinds of a move, I mean, risk and reward are inexorable. You expect this kind of a drop-off when it finally does end. Having said that, you have these big 10-day collapses, 12-day collapses, as you mentioned. We start getting out to the number of standard deviations that calls for a quick rally, and I think you'll see that rally when we get to about $1,000. But having said that, you're going to see sellers that missed out on this move down. This caught a lot of people by surprise in its depth and in its severity, and there are still some holders of long ETFs that I think are going to dump on the next rally and push it even further.
Bob, we discussed about the effect of a Grexit on the gold price, and there was discussion about the uncertainty in Europe could push the gold price up. In fact, maybe the gold price was up, and now with more optimism about Europe, it's going down quite sharply.
Well, it's a great point. I mean, I spoke of that as well in other interviews, and I did not see the type of rally that I would have expected as the Greek situation got progressively worse. You saw some gold rally, but what it's telling you is that the market has lost its sort of opinion that gold, not that gold isn't a safe haven, but that it's needed, and that it's needed in a portfolio. The whole global collapse story has really kind of gone away, and perhaps somewhat irresponsibly, but nevertheless, my job is to predict where the market's going to go, not whether the market's correct about it going there or not. So I think you're going to see things like the gold ETFs, the S&P Gold ETX FME is going to get hit pretty hard. Rio Tinto's probably got another 5 to 10% lower in it at least. And then the bottom fishers will start coming in there. But there's really no hope in sight for gold, in my opinion, until you get somewhere down to $975 and potentially even $850.
Bob, in South Africa, we're seeing gold miners under significant pressure. Are we expecting companies to shut down and close their doors should this negative trajectory continue?
I don't think that that's going to happen just yet. You will see layoffs, however. You're going to see layoffs and cost cutting first. It's very similar to the story we saw with the horizontal drillers here in the U.S. in terms of oil. When the oil price decline fell, I would argue it has a similar chart to gold right now. When the fall started last year in July, they held on as long as they could. And first they started with salary cuts and then some equipment reduction and then finally layoffs. And then after that, you started to see some closures. So I don't think you have to worry about that just yet in the short term. But if it continues like this, which obviously I'm telling you that it will, I think you'll see that. I just think there's going to be plenty of time to prepare for it.
That is independent analyst Bob from the U.S.